Good afternoon, Chris here from FTSE Trade Finder, or if you're watching this on YouTube, that's Brad Betting Guy. Quick video today while I'm on a bit of a road trip. A question that I think as traders we should ask ourselves. Why do we do what we do? Why are we putting money into the financial markets, or why are we betting on financial instruments? I think for your trading, or I think for me personally, for my trading to be successful, until I could answer that question truthfully for myself, I don't think I could be truly successful at it and have that desire to keep on going. People get into the markets for various reasons. There are a couple of good reasons that I can think of offhand, and a couple of bad reasons I can think of offhand why people get into the markets, and I'll just cover those. I mean, this is just a thought exercise. I'm just thinking out aloud here and just sharing the thought with anyone out there who cares to watch. Two bad reasons why people get into the financial markets. Well, I can think of three bad reasons off the top of my head. Bad reason number one, because they need money quickly, and they've heard that if you get into the markets, it's like a cash machine. You put some money in and you quickly get some money out of it. People make a fortune. Doing anything out of desperation or as a form of last resort is never a good way to start something. I'm not saying it's ultimately destined to disaster and doom and losing everything, because you might get lucky, you might find something you're talented at, or you might just have a combination of luck and talent. But if you're doing this as a last resort to try and make some money, it's probably not the best foot to be getting off into the markets on. Similarly, you also hear of people who read a bit about day trading and find the idea of just sitting in front of a bank of monitors day in, day out, clicking buttons to earn big money for a living. They find that quite attractive. There's a bit of a fallacy in that idea, because to make a good living at trading, to make a solid above average living, you need to be sitting on a whacking lump of capital to begin with. Say even if you wanted only to make an average living, I mean, I don't know what the average earnings is these days in the UK. Probably, I'd imagine an average Joe living an average life, not much luxuries, could get by on 20 grand a year to cover everything. So if you want to trade safely without taking much risk, while still building your capital and staying ahead of inflation, you need to be earning at least, I'd say, 20% return on your capital to make that pay. So as a bare minimum, that is 20%. So you can see quickly that if you want to earn 20 grand a year, I've lost my thread now, what was I saying? If you want to earn 20 grand a year and stand still and just keep your pot at what it is, earning 10%, you need 200 grand in the markets. 10% of 200 grand is 20 grand, so every year you'll be spending what you earn. Your pot's never going to get bigger, and inflation's just going to kill it, so let's call it 20%. Yeah, 20% of 200 grand, that's 40 grand. And that's just to earn an average living and keep your pot ahead of inflation. So the numbers are getting pretty big already, so you can see you need a lot of money behind you if you want to do this for a living. At the end of the day, it's a percentage game. So the more money you have under management, under your own management, the less percentage you have to make to have a big payday. It's as simple as that, really. So that's the second reason shouldn't dive into the markets. You shouldn't be thinking, let's get in there with, say, 20 grand that you've saved over X amount of years, or even your life savings. I'm going to make a living out of this on 20 grand. It's not going to happen, I'm afraid, unless you're lucky and talented, or a combination of both. The third bad reason, excuse the tunnels, there's about 3 of them along the stretch of road, but you don't really need to see my ugly face. The third bad reason, I would say, is for excitement. If you find the execution side, which is the placing the bets and watching the numbers race up and down, if you find that exciting, you need to step away from the markets and do a bit more research and think about what you're doing. I mean, I'm not trying to speak for you, I don't want to do that, but in my opinion, because by nature of it, the execution side of trading is only a very, very small fraction of the whole thing. The main body of the work, where you should be finding your interest and enjoyment, is in the research, in the charting, in the following companies, and the researching for new companies. That's where you need to find your excitement. If you're finding your excitement in the actual clicking that buy-sell button and watching the numbers go and waiting for the markets to close and waiting for them open to see where you're going, you're probably in it for the wrong reasons. So that's 3 basic bad reasons to be into trading. To make money quickly as a last resort, to do it as a living with limited capital, because you need a lot of capital to make it pay an average existence. Just an average existence. For above average existence, you're talking millions of pounds in your management. And doing it for entertainment. If you want entertainment and waste money at the same time, go down the casino, go to the bookies, go down your local arcades and play the fruit machines. You probably meet more people to boot as well. Good reasons to get into trading. It's quite straightforward that you're into business. You find big business interesting. You find the process of churning capital and how that impacts a business exciting. You like to read about management. You like to read about the board of directors, where they're going, what they've done in the past. So you could liken it to football, really. There's different teams working on different things. They all move around. They transfer to different companies. Some have good track records, some have bad track records. That can be quite interesting. So if you're into that side of the markets, if you know that information and you find gaining that information exciting, or you enjoy it, that gets you into good stead for picking those trades. If you just want to achieve above average rate of return on your savings, again, if you leave it with any high street institution, it's going to get annihilated by inflation. So even though you're receiving a paltry interest, your capital's being killed by inflation. So if you want to achieve above average rate of return on your capital, go ahead, spend the time doing it. Just don't expect to get rich. Again, spread betting is probably one of the riskiest things you can do with your money due to the leverage aspect of it and the margin required. So that's just my thought on the subject. Share your thoughts below, let us know what you think, and until next time, trade easy.